Hey everybody, how you doing? It's Bruce here with Stock Markets with Bruce. Welcome to the channel. It's November the 23rd here. It's Tuesday. A couple days from now, it's Thanksgiving here in the USA. And I wanted to talk to you today about GameStop. Now, we talk about GameStop here on this channel all the time. If you've never been here before, we talk about the stock markets in plain English and try to cover what's going on. We also cover the angle of call options against stock. We talk about that a lot. And a ton of my viewers, what they do is they own shares of GameStop. Some of my viewers have 100 shares, 200, 400, 800, whatever number. For every 100 shares of GameStop you have, for every 100 you got, you can write a call option against the stock. And a number of my viewers will write an option on a Monday and buy them back on a Friday, or they'll write them on a Wednesday, buy them on a Friday, or they'll write them on a Wednesday and buy them back the week Wednesday. They'll watch the contracts shrink in price, scoop them back for a lot less money. Now, in the last couple of days, this last week, it's been unbelievable. If you take a look at the GameStop chart, you will see what a run this stock has had in the last week or so. Even in the last month or so, you could take a look at how well this stock has done. But in the last few days, we have had a lot of movement. And this morning, when I started this broadcast, we were right up to $252 a share today. And at that point in time, I was mentioning to my viewers that for those of you out there who have not written a call yet on your shares, this might be a good time to write a $250 call option expiring this Friday, the 26th of November, or next week, 3rd of December, even the 10th of December. And a number of my viewers had already written options on GameStop. They had written 200s, 210s, 220s, and their options were way in the money because the stock had had such a big run. And I suggested to those folks that they take a good look at buying back their contracts, even though they're down on them. Turn around right now and write $250 call options instead, which will be worth at least as much as the calls that they're buying back, if not worth more than that. And a number of them did do this. And take a look at the stock. Now, today we're down 30 bucks a share right here at 217. We dropped as low as 213. We might even go lower today. I don't know. We're still an hour and a half to go before the day is done. But these call options, these $250 call options have absolutely plummeted in value. And there's the strategy at work right in front of our eyes. Viewers this morning who were rolling over contracts into the 250s, or those who wrote $250 contracts this morning, are cashing in big time on the collapse of these call options that are so far out of the money now. You know, $23 out of the money, $33 out of the money. I mean, way out. This is how the option market works. My viewers who own shares of GameStop, they don't ever want to sell their shares. So it's not great when they go down. It's great when they go up. But the reality is that they want to be involved with the stock for the long haul. No matter what the end game is, they're hoping that GameStop someday will have a massive run, and they will in the meantime, however, take option premiums when they're being handed to them. And this morning they were being handed to them just in the thousands and thousands of dollars. And you've got to take advantage of this kind of market, this kind of volatility when they're giving it to you. And so they did. And congratulations on those investors who are buying these calls back right now for, in some cases, only 20 cents on the dollar, 30 cents on the dollar for what they sold them for. Absolutely beautiful. Of course, what you do now is you watch the stock closely. If the shares have a bit of a rally and get back into the 225, 230 range, you might write $240 contracts. You might wait longer if the shares have a real run tomorrow, even higher. You might write 250s all over again for the next 2 or 3 weeks. Who knows? This is the thing about the options market. You're constantly writing options. You're making adjustments. You're buying back contracts that you make a killing on. You buy back contracts that you're losing on if the shares are going higher on you, and you roll them over. You're constantly writing new options all the time to bring income in to your account. And in effect, you're being paid to hold your stock. It's kind of like charging rent. You might as well be a landlord for a while. Become a landlord and get paid to hold these shares. Right now, 216.31 on GameStop, down 31.24. The volume, 2.7 million volume. That is all there is, 2.7 million shares. We're not even going to do 4 million today. That's what we did yesterday. This is telling when you have such slight volumes, very light volumes, on a stock that moves this much. You cannot sustain big gains like this after 3 or 4 straight days of up days. You're going to give something back, and at the moment, there's a bit of a give back going on. We'll stay on it, everybody. If you want to know how to do this, how to write options and make money in the market, go to my website, stockmarketswithbruce.ca, not .com,